And overall, they're not seeing the growth they need to show, and they're seeing significant competition next year. Tesla down 14. So not only are they losing share, but they're seeing their sales decline. And now they're shipping cars made in China to Europe because there's not enough demand. That was supposed to be their growth market.
Hey, I'm Steven, and this is Solving the Money Problem. If you're new, welcome. If you're not, welcome back. So boys and girls, have I got a treat for you today. We're bringing on the class clown, Gordon Genius Johnson, to share his incredibly insightful analysis, thoughts and opinions on Tesla's Q3 earnings. So let's jump into the video. But first, hey guys, if you live in the US and would like up to 2 free stocks valued up to $1,600 each, use the link in the description to WeBull and deposit $100 in your account. Each of these stocks will be a minimum of $8 in value. So if you suck at math, that is a 16% ROI on $100. Not bad. And if you're in Australia, the UK or New Zealand, you can get a free stock with stake, also using the link in the description. Let's get back to it. Oh, and before we dive in, just a quick little spoiler alert. A couple of key tricks from the Gordon Johnson playbook essentially means I'm lying to you. We believe that means we don't believe that. And say what you like about X means I'm not even going to respond to your valid point. I'm just going to talk over the top of you with one of my bare theses that has nothing to do with the question you just asked or the point you just made. Let's get into it.
If you think about what happened this quarter, right? If you take out the credit sales, they lost about $66 million excluding credit sales. But if you also adjust for Elon Musk's stock-based comp, that's a one-time charge as well. So credit sales one time, Elon Musk stock comp one time. So if you adjust for both of those items, they did about 10 cents in earnings this most recent quarter. So if you annualize that, that's 40 cents. At $450, that means this stock is trading at over 1,000 times on a P to E basis, price to earnings basis. No stock in any technology exchange is trading at that level. What that means is investors are saying they're going to grow earnings every year on an annualized basis at CAGR at 1,000%.
So if you look at Tesla's Q3 results, but then you extract all the things that don't serve the bear thesis and just totally ignore all of those, then make up some new numbers that aren't actually real, but kind of pretend that they are and use an EPS that doesn't actually match the reality of the financial results, but the reality of the financial results that I'm constructing by removing and cherry picking, you see what I'm doing there? Then it's a big bear case and the EPS is really high. Come on, mate.
But if you take a step back and look at what's happening in Europe, year to date through the third quarter, European EV sales, excluding Tesla, are up 106%. However, Tesla's European EV sales are down 14%. So the market up 106, Tesla down 14. So not only are they losing share, but they're seeing their sales decline.
Declining sales, you say, Gordon. Declining sales, you say. Okay, please explain to me where on this chart we have an indication that sales are declining, either on the sequential quarterly deliveries or the trailing 12 months. I mean, where's the evidence of these declining sales? I forgot. You were cherry picking. Now, call me crazy, but I have an intense aversion to dishonesty, and that seems to be what I'm detecting here. Gordon is spinning a narrative to suit his bear thesis that's not based on reality. Yet there's people out there who'll hear the words come out of his mouth, see that he's on a platform of influence and go, well, this guy must know what he's talking about. I'm going to stay away from this stock. I'm going to short this stock, or I'm going to do something else contrary to the actual evidence based on this clown's opinion.
In China, essentially their sales have stayed flat since May at about 11,000 cars, and now they're shipping cars made in China to Europe because there's not enough demand. That was supposed to be their growth market.
As soon as I heard about Tesla's plans to begin exporting made in China Model 3s to Europe, I knew Gordon would bring this up. Now, I have a question for Gordon. If Tesla sells one car, does that count as Tesla selling one car? It's a pretty simple question. I think the answer there would probably be yes. Does Tesla have a factory in Europe currently producing Teslas? The answer would be no. Are the Teslas produced in China more profitable than the Teslas produced in the United States? The answer would be yes. Has the Shanghai Gigafactory ramped very quickly, and is it ultimately going to get to over 1 million vehicles per year of capacity? The answer would be yes. So then does it not make sense that Tesla, instead of selling their expensive US-based vehicles with lower margins, shipping them all the way over to Europe, could instead start shipping some of that production capacity from China to Europe instead? I think that's a fair point. I would just like to make a counterpoint to Gordon's intellectually rigorous point here. The only thing that matters is how many vehicles Tesla sells. Period. The fucking end, okay? It doesn't matter where they're selling them, where they're shipping them to, where they came from. What matters is that they're being sold on planet Earth. The end.
So you have 46
Gordon,
new EVs coming next year. So we think that they're going to have problems, seeing the growth, and they're trading at a very high growth multiple.
Gordon, let me just play out the bullish case to you and get your reaction. The bullish case would be, sure, they get these credits right now. That those credits are allowing them or giving them runway to continue to innovate in their business to a degree, perhaps in the future, that they continue to outpace their competition, that the business unto itself should not be valued strictly as a car company. We've had people like Chamath Palihapitiya, who's a big investor in Tesla, come on the program and say, you need to think about this not as a classic automaker. You need to think about the potential for this being a major, effectively, energy company 5 to 10 years out. What do you say to that investor who's watching this morning, who thinks that?
Spoiler alert, I know what's going to happen. He's not going to answer the question.
All right, so I just want to be clear. Again, roughly all of their credit sales are to Fiat or FCA. FCA has stated they're going to spend about 800 million euros through 2023 over the next 3 years. Tesla has essentially recognized all of that revenue already. We only think there's about 500 million left. So next year, they're not going to have the credit sales they have right now. They're not going to do 400 million in credit sales, right? They guided last quarter that they were going to do about 200 million in credit sales this quarter, Q3. They did about 400 million. And this isn't cash-based credit sales. This is credit sales they're pulling forward from future years. You can see their receivables are up by a similar amount. With respect to them being a bunch of different businesses, look at their energy division. Revenues are up roughly 200 million, but so is cost of goods sold. So you didn't have any increase in gross profit. Their R&D spend is not increasing as a percent of revenue. It's dropping as a percent of revenue.
Round of applause for Gordon Johnson there. He scored a brilliant own goal. What a solo effort there, explaining that Tesla's R&D budget isn't scaling in line with their revenue, implying that they're doing more with less and they're becoming more profitable. Great point, Gordon. I agree with you on that one.
So the point is, we think that next year, we think they're going to go back into structural losses. And, every single question, the only question that should have been asked on their earnings call last night was, what is your credit sales in Q4? Because if it's not 400 million, if it's 200 million, they could potentially lose money. That's the only thing that matters. They are not making more money than they're selling in credit, and that's one time in nature. So I think the point is, you can say a lot of things you want to say about Tesla, but the reality is, you're talking about a company that's valued at 1,000 times earnings, where you're seeing growth decline in Europe, growth has stalled in China, and overall they're not seeing the growth they need to show, and they're seeing significant competition next year.
Ooh, some big points here from Gordon. So Tesla's not growing despite the fact that they reported record production, record deliveries, record revenue, record cash on hand, record free cash flow. Am I forgetting anything? And of course, the competition is coming all over your face.
Keep in mind, they just introduced new guidance where they said it's going to be tough to do 500,000 cars of deliveries this year. They're saying their capacity is 860,000 cars right now.
Gordon, I'm so sorry to have to do this to you, but let's bring up Tesla's Q3 report and just fact check what you said. So let me just read something here under Fremont. Production should reach full capacity towards the end of this year or beginning of next year. Interesting. Let's read on even more. Installed capacity does not equal current production rate. Gordon, did you catch that one more time? Installed capacity does not equal current production rate. Production rate depends on pace of factory ramp, supply chain ramp, downtime related to factory upgrades, national holidays, and other factors. This information about Tesla's current production capacity would be how many vehicles they could produce if everybody was working 24-hour shifts, 7 days a week, nobody took a break, no upgrades were required, no maintenance was required, no new equipment was installed, nothing happened but production non-stop. It doesn't work that way.
So they're not even able to sell out their existing capacity, and they're talking about ramping additional factories.
You know what? Maybe I've been a little harsh on Gordon. Maybe he just didn't know that. Maybe he just didn't read that part of the report. I'm really sorry, Gordon, if I misunderstood and thought you were trying to deceive and manipulate and twist things around to suit your bearish narrative. Maybe it was an innocent mistake, so I'm really sorry for coming at you just a little bit hard there. My apologies, my friend. I do apologize. I didn't mean to upset your feelings. I just wanted to sort of point out that what you were saying was actually not true. And you said that on CNBC in front of a very large audience who might think what you were saying was true.
About ramping additional factories. Last night they pushed out Berlin, it seems 12 months. So I think there's a lot of problems that people just aren't focused on.
Gordon, thank you so much for doing this service to investors and helping to point out the problems that we should all be focused on. I'm sure you're helping a lot of people make far more informed decisions, so thanks again. And guys, just to be super clear, everything in this video was my opinion, nothing more, nothing less. Speaking of my opinion, how about I share another one? My opinion, again, I have no evidence here, but this is just my hunch. Either Gordon Johnson has an intense humiliation fetish, each to their own, or he's short Tesla stock, or he's a paid oil shill. Again, I have no evidence whatsoever, just a hunch. I'm Stephen Mark Ryan, this is Solving the Money Problem, and I love you all. And don't forget your free stocks with WeBull and stake using the links below. Open a new WeBull account, deposit $100 and you'll get 2 free stocks valued up to $1,600. And stake, spin the roulette wheel, you'll either get Nike, GoPro or Dropbox.
Thanks so much for watching. Let me know your thoughts in the comments below. And of course, if you have any ideas for future videos, let me know. I read all your comments. P.S. If you're still watching, you're awesome. If you'd like early access, exclusive videos, regular Q&As, our private Discord server and more, consider supporting the channel at patreon.com/solvingthemoneyproblem so I can keep creating content for you guys. There's a link in the description. You can now also become a member of the channel for some exclusive perks. To learn more, click the join button next to subscribe. And don't forget to check out our merch store. Either way, the best form of support is you being here and watching, so thanks again.